Good morning and welcome to the European crossover webinar. And we're still continuing to see the dollar holding its gains here. Euro continues to be pervasively lower. The cable has gone and pared back a bit, and dollar yen still holding rather steady. We'll go on and get to the news. I don't think the only thing we have seen is we did see the bunds move to new lows as far as price, higher yields. We will go on and quickly take a look at news, and then we'll get into the story. Coming in today, we do have building permits. It's going to be 8 a.m. Eastern, followed by Canadian retail sales at 8:30 Eastern. Mexican GDP will be at 9 a.m. Eastern. New home sales at 9 a.m. Eastern. Put this out of the way. The wait for Jackson Hole is almost over. Markets have waited all week for Federal Reserve Chairman Jerome Powell's speech at Jackson Hole, and today is the day. He speaks at 1400 GMT. World stocks are flat, albeit set for a weekly gain after 3 weeks of losses. Asian shares inched up, and European markets are set to open higher. Currency markets focused on the yuan, which slid to as low as 7.0992 per dollar. It's weakest since March of 2008. That's likely to stoke more tensions with Washington, which has already branded Beijing a currency manipulator. The yuan's weakness, as everyone watches for the 710 level, is to be breached, is weighing on the rest of Asia. As for the Fed, its meetings released on Wednesday showed the central bank divided on whether more rate cuts were needed. This week, Fed officials Esther George, Eric Rosengren, and Patrick Harker have expressed doubts that more cuts are needed. Money market expectations for rate cuts have not budged, but the dollar has inched higher expectations that Powell might cast doubts on a prolonged rate cut cycle. The dollar is set for a second week of gains, and the U.S. 10-year yields are at a one-week high. The 210-year yield curve continues to flirt with inversion, but since the Fed's last meeting, the world economy has worsened, and markets will be watching for any Powell comments on the new economic developments. Even in the United States, advanced PMI readings this week showed manufacturing had contracted for the first time in a decade. Services remain buoyant almost everywhere, but the surveys made for depressed readings. This morning's Japanese data endorsed the trend of core consumer inflation was at a 2-year low in July as the trade war takes its toll. The pound has come off a 3-week high of 22.73, hit after traders interpreted comments from Germany's Angela Merkel to mean that the solution to the Irish border could be found before Britain leaves the European Union on October 31st. Now attention turns to PM Boris Johnson's G7 outing, which opens in Biarritz today. He is set to have lunch with President Trump on Sunday. European stock futures are flying high, clinging to hopes for a respondingly dovish speech from Powell. Let's see here. And let's see. Okay, let's go move on. The dollar steps forward before Powell and Kiwi jumps on RBNZ comments. The dollar jumped higher versus the yen on Friday on expectations a pivotal speech by Jerome Powell will reinforce that the U.S. Central Bank has not entered a prolonged monetary easing cycle. The greenback hit another 11-year high versus the Chinese yuan. New Zealand dollar was the bigger move on the day, jumping from a 3.5-year low after Pacific Nation's central bank and chief said he was pleased with where interest rates were, hosing down the expectations of more immediate rate cuts to follow this month's aggressive easing. Powell gives the highly awaited speech later Friday at the meeting of central bankers in Jackson Hole. Doubts about further easing emerged after 2 Fed officials said they have no reason to cut interest rates, again without new signs of economic weakness. Currency markets have in recent months been driven by global central banks' shift to much more accommodative policy settings as economic demand slows and trade disputes intensify. Expectations that the Fed will cut rates at its next meeting in September are still very high, according to interest rate futures, but the currency market is likely to react if the tone of Powell's comments does not match those dovish expectations. Besides the Jackson Hole meeting over the weekend, a group of seven summit in France from Saturday. It could also rattle currencies. The European Union hopes to ease tensions with the United States to avoid punitive tariffs on EU autos. The rate market is well ahead of the Fed in pricing aggressive rate cuts, but Powell may not be as dovish as the market is pricing, said Masafumi Yamamoto with Mizuho. Powell will keep the option of rate cuts on the table, but won't lean too strongly in that direction. This would be supportive for the dollar. The dollar index against the basket of currencies rose 0.2 of 98.34. Concern about China's economy is growing because U.S. tariffs, roughly 150 billion Chinese goods, will take effect from September the 1st, about half the value of the imports from the President Trump's previously threatened duties. Well, you're not going to mention anything further on cable and whatever. These make no hill of beans for today. We know what really is at the forefront. And I mean, these tariffs are taking place on September the 1st. I mean, how Powell cannot be accommodative is beyond me. I think honestly, I think it'd be bordering on insanity. That might seem like a stretch, but seriously, I mean, you're about as close as can be. Today's the 23rd. What, they take place on September 1st, and I already made that case on Twitter. What are you going to say is, I'm going to wait till the house burns down and then I'll buy the insurance? I mean, like I said, you already see these other banks and, doing as much accommodation as they can. We've got the most room to make changes. It's not like as if we're at like Japan, who's been accommodative since, like I said, since before. I said on the Daily Wrap, I've been accommodative since before some of y'all probably even been born. No kidding, seriously. And as far as the ECB, Draghi being the first ECB president to have never raised, I mean, never. So, I mean, it's not like as if we don't even have the room. So he needs to show that he's maybe not devilish, but certainly rather accommodating and open to what the risks that we have that are literally just a little over a week away. I mean, it's just absolute insanity if he doesn't show that. We'll see what happens. But obviously the market thinks that he's not, and that's why you have the dollar index up at these levels. And I mean, if he's not, you're going to see the dollar, blow doors. Now, whether that is an extended move, it'll be one thing, but at the very least, it's going to blow doors if he's not. And certainly that's how the market is holding itself up to be. We're going to move on to the bias chart. Well, we placed our support at 1053, but obviously we can go much lower. And this support's got to be down here, down there at 1028. I mean, that's where, right there, we'll call it 1024. They could easily go down there. And like I said, when you look at how far it can go to, it's actually going to be 110. So it's going to be, we're going to go right here and say 1024. And, I think we even have to see right here. 1024. And on the upside, it's going to be 1129. I mean, considering where 29 is right now, you have to figure that's 55 pips away. And obviously the market will back off from that. We'll probably rally up there if we do, and then pare back. We'll have to see how dovish he is so that we can actually get up to potentially 1160.70, which I thought we'd actually be there as we came into the speech. And obviously they just don't think it's going to be as accommodative. We've already seen comments from Harker who says, who cares about, European yields, which is idiotic. I mean, when you think about, once again, like I said, this isn't about propping up equities. This is about what, we're certainly going to see this impact. And obviously you're seeing that with the strengthening dollar, obviously weakening yen, weakening euro, and a lot of these yields going lower. And the U.S. is going to be, the economy is going to be one that's going to bite on that. And hard to believe these guys can't simply connect the dots and see where we're going. When, like I said, as I mentioned, Draghi is going to be the first ECB president to have never raised. And so this is certainly pushing the dollar. And how can you not be looking at the dollar with, tariffs literally just barely a week away, a little over a week away? So, like I said, I don't see how Powell cannot be, accommodative. How dovish, we'll have to see. But, I think he needs to be more than just tepidly accommodative. We'll go and move into the cable. It's going to be right there. 2077. Let's take a look here. There's that 2080 we talked about. It called the 2077. You'll actually going in, as the dollar's going to take a pretty good run if that happens. Um, we're going to put it right there, 2105. 2105 for support. We already have that there. Resistance is going to be right there, 2257. The Aussie's just dead in the water. Look at this. I mean, this is just, it's August trading. Everything else has been dead, but boy, this is just unbelievable. If you look at this, we've been trading in essentially basically a 15 pip trading range for 8 hours, with the exception of this pullback here. So no changes here with the Aussie. Let's go move into the Kiwi. We did go as low as 63.78, obviously not low enough. Here's where the support is, which isn't that far away. And we'll go with that, which is going to be 63.64. And on the upside will remain the same, 64.36. We'll move into the dollar CAD. Well, it's right here. You can see that clears a bill, 33.82. Let's go into the 2-hour chart, see if we can see something a little bit closer. And it's going to be that same 32.56. No changes. Let's go move into the peso now. I mean, finally, it looks like hopefully we'll be finally at the end of this, or near the end of this August slow trading. And you can see here, this was cleared also, 1995. But this quiet August trading is, there's not a whole lot of analysis to go and do because everything sits relatively quiet. Looking on the downside, $19.55.8. We're going to look a little bit lower if we see once again that reaction. 19.52.2. Well, Dalian, obviously no changes. Look how quiet we've been. Look at the way this market's been trading. If you look from here to here, you've been basically 37 to 6. You've been trading what, a 25 pip trading range? What the last 6? It's what about the last 24 hours? Just about, seriously. Initially, if we were to see that, resistance would be to allow for that break higher be 720. And down here would be 591. 591. Let's move into the cash dollar index. I don't know what happened here. Oh, there we go. That was nutty. It's going to be these highs, just like the same way the euro is on its low. It's going to be 98, 93. But we'll call a little bit higher, 98, 98, 96. And on the downside, 97.60. You can see it right there. Let's go and move into the cross rates. Well, it's the end of the week, and man, it's, you know, I'm feeling so sleepy. Um, well, we had 67.81, and the lowest so far has been 67.72, so not bad, but we'll just move this to 67.75. And the upside will still remain the same at 68.33. I'll open this up to see a little bit clearer, but you can see right there. 68.33 up here, right there. And we just have 67.81. It got dipped as low. Well, right there would come in. So we, like I said, 67.74. We'll go and move into the euro yen. Well, no changes here. You can see that we're trapped, as what all these yen pairs have been. So nothing here, with the exception of the guppy, which is moved, you know, outside of the range. So let's go move into the euro odd. As I said, the thing about August trading is you go fly through this bias chart because we're so quiet. We're just not seeing that much trading. Um, and the euro on 64.76 and 63.77. Well, the 63.77 is holding right here. Let's take a look here. And we'll give the euro the benefit of the doubt. Although with the weakness that we're seeing here in the euro, but these bonds they're lower too. We'll stay with the 64.77 on the upside to avoid any kind of surprises. So we tighten it up so much that it jumps above it, and the next thing you know, you wonder, well, where the heck is resistance? So we'll stay with that. There we go. And the euro kiwi, we had 74.51, and we're going to go and keep that here. Um, there we go. And 73.35. Well, we've been as low as 73.11. I'm actually going to have to lower this here. Right there, 73.14. Soon we'll be able to see these markets start to move again. Let's go move into the Aussie. Aussie yen. Look at this. Oh my goodness. This is just, it's almost laughable. Look at this. The range here, and you would think these were 1 minute bars. The range here has been, oh my goodness. It looks like 3 pips for 2 hours. 3 pips, next hour, 3 pips. Uh, we have been trading 86 to stretch it to '06 for the last, so we've been trading in a 20 pip trading range for what, nearly, well, yeah, 24 hours, 24 hours. Unbelievable. So no changes here in the LCM. Moving into the guppy. We did break out of this range. We're kind of sitting here. Um, there it is right there. 3065. Push can be right there. 2913. Let's go into 39. We had 8007, and boy, they got well past that. Boy, did we see a pretty good run here. That's actually going to come in at, let's just say 8170, but let's move that here. 8139. $79.82. Let's go into where the boons are. We have gotten past this trend line, and we actually broke to new lows here, but we quickly popped up. We have broken this trend line, so we're looking for this to fade. We'll have to see. I mean, obviously, lower boon prices is supported for the euro, but today is a big day. Today is a big day, and we're seeing gold just hold steady here at 14.95. We talked about this, and I mentioned earlier. A gentleman asked me early in the week. I think it was Monday, maybe, was a good area to sell gold, and I was like, no, because we're just marking time right now ahead of Powell, and if he is dovish, this gold will rip higher. I think that's what will happen. Obviously, we're going to see how dovish if he is. I gotta think he would be. I think we would challenge. Um, Probably the initial resistance. Actually, if he's not that dovish, still mildly, it's going to be 1515 right here. Actually, 1540, 1514.80, and then 1525, 1525. We can blow past it, whether we be able to maintain. Obviously, if he, you know, If he shows himself to be rather accommodating, yeah, we could break to new highs and then fizzle. But the levels you'd be looking at be 15.15 and 15.25. Switch is still holding up rather well here. Obviously, all bets are off if he's not that accommodating. And we have to see how far we push. And it's just, to me, it's just nothing short of insanity. That might seem bit of hyperbole, but seriously, I mean, we're going to see a very good reaction, and then ultimately, and not even that far ultimately, we will see the impact in the economy come up rather quickly, and then the Fed's just going to look like a bunch of idiots. And if that happens, I certainly hope that when they have the next meeting, that they really hold these people's feet to the fire, especially if that's the case. And I really don't think it's going to be, because I just think it's just lunacy. Because, like I said, their job is not to follow the dollar. But I'm just saying is we're right there. We're on the precipice to an extent that if that does happen, the dollar is definitely going to go and shoot higher. It's definitely going to exacerbate the situation with the tariffs that are literally just a week away. I mean, it's mind-boggling that he would not be, maybe not jump into a dove suit, but that he would not show himself open to this accommodation. And what's staring himself in the face would be, not only the slowdown, the potential for recession, the global slowdown, and what we're going to sit there and say, oh, we'll just take it meeting to meeting, when we're the ones that are actually being directly impacted with these tariffs. It's beyond my scope to realize how he could not be, but we shall go and see. So here we are, back to main screen. You can see where we're at. Looking here at the euro, it'd be 10.24. I mean, we'll go back in here again as we get ready for Jackson Hole. I would have thought that we probably would have been, at around maybe 11:30. Like I said, I'm going to be honest, say, yeah, this is where I thought we would have been, is probably like 11:30-ish. And then as coming into Powell's speech, we'll probably be right around 11:60-ish. So I'm surprised that we're down here. And actually, the euro's held up well the last couple of days when it had the opportunity, especially on the minutes, had the opportunity to dip lower, and it didn't. But we're holding here. But I would have to think we would start to move higher as we get closer to Powell. I honestly said I think I have to give Powell more credit than that. I think it'd just be absolute absurdity to think that he would not be willing to see that. Once again, I have to reiterate, it's not about the Fed following currencies, but you can already see what's going to happen if he's not. The dollar is going to go on and take off, and it's going to exacerbate a situation that is directly affects the U.S., which is going to be these tariffs that are going to be in place starting to September, which is going to send us on a pretty good recession. There's no doubt about it. You know what I mean? So, and you will see S&Ps come off pretty good chunk of change too. And then for them to react in December, it's just going to look like literally going to look like the Three Stooges. I'm not joking. So I have to give more credit to that, thinking that is not going to be the case. Now, obviously, we're so low here that even if we do rally, if we did rally, we may only make it up to about 35. But we shall go and see. And we already mentioned 33.82 on the dollar CAD here. So we'll see what happens. Also looking at the cash dollar index to recap here. I mean, we're so close that, as I mentioned, all we have to do is we'll take out these highs right here. If he's not that dovish, the market's going to want to push for that. And we already know that it's just going to, I keep saying it's just going to exacerbate. To me, it just seems so obvious. How could you not be accommodated? But I just don't see how it can't be, because we are going to be severely impacted if that's the case. And it's going to come rather quickly. So that's what we got here. Good luck. for trading for Jackson Hole. Let's see what happens. Here's the bias chart. I'll get it posted. And thanks for joining us here on the European Plus webinar.